Right, so we should be good to go. Okay, 9 o'clock. So welcome everybody to this webinar on debunking the myths of AML compliance, and we're going to cover a bit about the process around your first AML audit. So my name's Sam McGeorge, Vigilance. I've got Monique Villar with us today. Monique's going to drive some of the screens because we're going to jump between some PowerPoints and the interview here with Udaf. I'll introduce you to Udaf.
Hi.
Udaf, you've probably read the bio that I sent around, has certainly qualified to answer some of these questions today. Been involved, just briefly, as bio as he's been involved with the FMA in putting the Act together, and certainly now is a private auditor and consultant, and so in a unique position of seeing both sides of the camp, I guess, in terms of compliance and obligation. That's for phase 1 and phase 2 entities. So just before we get into it, if we just pull up that first screen, I'll give everybody a format. So the format today for this webinar is, well, the housekeeping is if there is a fire or a tsunami, you don't have to do anything, but we might have to leave the building. So we'd reconvene this webinar in the future. Hopefully that doesn't happen. So this is 45 minutes long. We've got a lot of content to get through, but we want to cover it in detail. So it's interview style. So you guys are on mute and can't chat, but you'll see that there's a button at the bottom of your screen for Q&As. We encourage you to submit your questions and answers because if we don't get to them or don't cover them, we can come back to them. We're going to publish all these at the end, not who submitted the question, but the questions. I think that's going to be really helpful for people to understand where you are in your compliance process. And if you don't submit them anonymously, I'll say that's going to be private to us, but we'll be able to come back because we know who asked the question. Monique's also going to run a poll through this webinar, and that'll be providing some more insights, and it'll help us understand perhaps what we can drill down in a future webinar. And of course, the webinar will be recorded, so we'll share all this information probably be about midday Monday. We'll publish the webinar link so you can look back on some of the stuff we covered today, along with the polls and so on. So without any further ado, I think we just crack into it. So welcome again, Rita, great to have you here. And the first question we have is on, what is our first question? Our first question is, should you have a risk assessment done sooner rather than later? And just to frame this, if you haven't had an audit, your risk assessment hasn't been tested, so it remains untested, such as your compliance program as well. So can you tell us from your experience, you're doing audits all the time, what do you see in terms of people's risk assessments or where they are with them?
So like you said, the risk assessment is the core, the founding document of your program. You have to do your risk assessment before you put in your program or start doing CDD.
Right.
So if you haven't done your risk assessment, that's a problem straight away. Right? So what we've seen last 6 years of looking at various risk assessments is that people don't really understand what they're doing. They're using templates, they're using consultants who make these documents that are overtly complicated in my view. They go into parts of risk assessment that are not required by law. And then when we do an audit and ask the person to talk to the risk assessment, how they arrive at their risks, they generally are not able to give a satisfactory answer.
So effectively, if you've got an over-wordy and deep sort of a risk assessment, lots of copy and pasting from the Act and the Code of Practice, it's harder to follow.
It's harder to follow, it's harder for them to review and keep it up to date as well. And it's harder to support the conclusion that you've come, arrived about your risk. So like if you're putting in a risk as a combination of likelihood and consequence. So it's very difficult for you to justify the consequence of.
Because this is not just about the AML officer. The AML officer's job is to make sure that this is understood, but if staff are executing this, and often they will be, that they need to understand. So it really needs to be part of the culture.
Yeah, absolutely. Section 58 is quite clear. It says you have to assess the risk of you facing money laundering. And then you have to identify, after you assess the risk of you facing money laundering, that assessment should help you identify those risks. Right? And then once you identify those risks and the risks in relation to your obligations like CDD or making a program or even like vetting, staff vetting or training.
Right. So this is where the risk assessment has to tie in with your compliance program.
Essential.
They dovetail together.
Essential. Right. The purpose of doing the risk assessment is to help you put in your program. And helping you understand what CDD you have to do and what transaction monitoring you have to do. So you have to be able to identify those issues. Okay, great.
All right, so so this is topical as of now. What if you don't submit your annual report on time? So as everybody should know, you have to the end of this month to submit your annual report. So you should have done that. You should have certainly registered with, there's a link there for you to note AML online. I'm sure most of you have done this already. And there's a portal there where you can start filling out the over 100 questions of your annual report. Now, something you highlighted before is a lot of people don't understand that that's the deadline to submit it, but it was closed till
30th of June.
23rd of June.
The 30th of June. Right. So that's another myth, right? So the cutoff period for your annual report is 30th of June. So everything that happened until 30th of June.
Right. Not what you've done between then and rushed up to now.
No, because you have that period, the grace period, to submit your report by the end of August, but it is for that previous period. So that is a bit of a myth. People think that they can do it in the last minute, then it is covered. No, that's not it.
The last minute's already been and gone.
It's been and gone.
But my view is that if you don't submit your annual report, then and I can say this with conviction, talking to the DIA recently, that you're really you're making yourself get noticed.
Yeah, I mean, it is mandatory. You have to submit it. You have to submit it when DIA tell you, your supervisor tells you when to submit it, and in the format.
That's legislative.
It is legislative. So it's legislation. So there is no discretion in that.
Yeah.
You might be able to get an extension if the supervisor grants it to you, but why go there?
Yeah, there's exactly. And look, while there's no extension, it's not like they're going to take the portal down. I'm sure. There is some grace, but that's not for us to provide. It's certainly what the was considered by the DIA or the Act, or was ingrained in the Act. So question 3, do I have to do CDD on every customer?
If you're a phase 2 reporting entity, it'll be the customers who you provide a captured activity to.
Right.
That's it, So you might want to do it on your entire customer base to make things simpler, but certainly on the customers to whom you provide a captured activity. For phase 1, on every customer.
Right.
There's a section in the Act that talks about whether you have to do CDD on existing customers. I think it'll be a good idea to understand how that applies to your business. It's shorter time to really go into all the details of.
Yeah, there are some nuances around it, but it's easy to navigate through once you understand it. And importantly, again, this has to dovetail back into your compliance program, which is built off the back of your risk assessment. Yeah. And so let's say you're a lawyer. If you're doing litigation work, that's not captured activity. So you don't necessarily have to do CDD on your customer. But then you have to understand when you have to do advanced CDD.
Enhanced
CDD.
Enhanced CDD again. Section 22 of the Act tells you the circumstances. Right. It is there in the Act, right? Yep. You have to do it. Yep. If those circumstances apply to you.
We see a lot of misunderstanding around CDD, and this is probably one of the myths. You don't have to do it on every customer. There are certainly decisions that businesses will make whether they bring on their existing customers, or maybe if it's a law firm, they'll do it when they capture their new business with them. And again, the workflow between certainly for phase 2 entities, lawyers, accountants, and real estates, their workflow is quite different, the way they engage with customer, the way they deal with customer. So that's got to be considered. Again, that's in your compliance program.
Yeah, I mean, yeah, the issue about existing customers still applies to phase 2 and phase 1, because quite a few businesses will have a huge customer database of people who are on board before that applied to them.
Yep.
So they, it'll be really good for them to look at how, I think section 14(1)(c) of the Act that talks about, doing CDD on existing customers. So this will be a really good idea to get a good understanding of how it applies to your business, because that gives the report entity the discretion. It is their discretion. Then if they are using that, it is good for them to write it in the program. In the section that applies.
And that's the important point here. If if you use ground zero, if you like, as your audit in the future, think about all the things you need to have in place to do well in your audit. And that's, again, dovetailing your risk assessment, your compliance program, the culture of how you execute, your staff are onboarding customers, when it's appropriate. And if for your business, if it's appropriate to do all of them, do them all. But CDD on more complex entities can be arduous. It can be, it's got to be done.
It has to be done. If it's an existing customer, there is a considerable amount of leeway in the Act. There is considerable amount of leeway in the Act, right? Because in the end, you've been dealing with them for a period of time. You know something about them. You've got information about them. Are you satisfied with the information that you've got about them? What has changed in that relationship with them? And again, it is really good to put that in the program. Write it down. That's what your program is about. Write your processes. So what you have to do is there in the Act, but how you will do it is what your program is all about.
Right.
And how you will, apply that legislation to your business. How you will comply with it.
Cool.
So,
and so and any one of these topics, guys, there's going to be, we could do a webinar just on these areas, but it's just that high level debunking some of the stuff, so you get a flavour of where you might be in your compliance. So here's another myth from fact. A lot of people are either not doing PEPs or not sure when they need to do PEPs. So that's the politically exposed person check, and some we've talked to when we first talked to them are doing checks by LinkedIn, Google searches and so on, which is not appropriate and not robust and time consuming. So the Act clearly says, yes, you have to do a PEP check.
On every customer.
So tell us why you do a PEP check.
Why do a PEP check? It's understood globally, right, that political corruption is a problem, especially in the developing countries. It's a massive problem. There's a lot of aid that goes to these countries, but it doesn't reach the people.
Right.
So it's a global consensus that we have to stop this political corruption. So the OECD came and visited New Zealand way back in 2013. I started up for FMA at that time, and they were really keen on understanding what are we doing to prevent political corrupt money coming into New Zealand. And the AML Act was our sort of gatekeeper. So any institution that deals with potential PEP has to identify them. It's important to understand that not all PEPs are bad, right? And so it's, a politician is not inherently corrupt, right? But you have to know what they're doing with you. And we are aware that there is political corruption in some countries, and that money is coming into New Zealand or in other parts of the world. So globally, the consensus is we have to identify that money and and detect it and identify it.
So
identify it.
So Kiwis are typically, certainly, and we see this in the fraud space, sort of she'll be right, and we're a bit laid back, and that's the beauty of this country. But we're not so in touch with that. But there's a real need for it.
Because people think that I'm not going to get a politician, opening an account with me from an overseas politician, because in the context of the New Zealand legislation, that official has to have that position in an overseas country. That's the primary trigger. And then what people don't understand is that you also have the relatives and close associates part. That is more likely to come apply to your business, or those people might be your customer, because you have a lot of expats here. There are people from all over the world.
That's true.
Yeah, and their relatives are here. And
so if we hit, you hear the argument, oh, look, I know my customers. I've had this client for 25 years. I go to their speak to their wedding of the daughter, but you can't possibly know all the associates and family relatives who may have an influence on on something.
Yeah.
As distant as it seems, regardless, that's the act. And so it's prescriptive.
Yeah.
You have to do it.
Yeah, and like again, you spoke about LinkedIn and Google search and stuff there. Okay, they might identify that politician successfully, right? But very rarely you would be able to identify the relative of that politician, which is more sort of applicable to.
So that's exactly why you can do PEP checks. So we've got a question here. Do you want to read that out, Monique? I can't quite see that.
My understanding was we do PEP checks on foreign internationals, not New Zealand citizens. Is this correct?
No, that is not correct.
No.
That is not correct because you might have a New Zealand citizen whose relative is a high-ranking official or falls under that definition of a PEP, interpretation of a PEP.
Right.
So that New Zealand citizen might be might have a joint venture, might have a business relationship with the person who's overseas, and that's what is really important to understand. And that's what I've come across, where people think that you don't have.
Yeah, I don't know where that came from, but that is a common. We hear that a lot.
Yeah.
And the Act clearly says a PEP check has to be done on every.
Has to be done.
Actually, a PEP check has to be done on, provided if it's a captured activity.
Exactly.
So for phase two,
phase two,
if it was litigation, you wouldn't do a PEP check, just as you wouldn't do CDD. If you choose to do that in your program.
Yeah. I mean,
and you can justify that in your program, in your compliance program.
And like, again, like I said, dealing with PEPs is not prohibited. And when you're looking at these things for phase one, and it was the Reserve Bank, the people who were running Reserve Bank's AML sort of things, they were absolutely adamant on making sure that we passed on the message to the market that dealing with PEPs was not prohibited.
Right.
Absolutely not prohibited.
Okay.
All you have to do is have a process for approving the PEP and then monitoring the transaction, monitoring the money that they're putting in. That is all you have to do. So I've come across many programs where people say, you're not going to deal with PEPs. Why not? It's just because they're a politician doesn't mean they're bad. There's just a process of handling that relationship with them.
And in any regard, doing a PEP check is actually quite easy through services like Centric, Equifax.
Yes, it is quite easy. It is quite easy because they,
the proper sanctioning lists that are relied on by government. So.
And I think these companies they have access to lots of newspapers, a lot of news articles. They do all the hard work. They do all the hard work, and like if you do a Google check, for example, right, you might get 100 hits, for that person. So
yeah, it's just not productive.
It's not productive.
So it's not robust. I don't think we'd actually spend that much time on PEP because the Act says you do it. So on to this next question. What if you don't have a risk assessment done? Now, we'll spend some time on this because, believe it or not, some of the audience here today will go, oh, you should have it done. But look, there's a lot of people at ground zero still, and it's because they don't know which way to move and dovetailing the compliance program in with the risk assessment. So, Udif, what do you see? Again, you're auditing, you're out consulting, you see businesses all the time across all entities. What do you see?
So like I said, what if I don't have a risk assessment done? You've done you've breached your obligations. You have to do the risk assessment. You can't do your CDD without doing your risk assessment. You can't have a program in place without doing a risk assessment. So Civil Liability Act and offense and all those enforcement things will apply, might apply. That depends on how the supervisors take that.
Right.
But with the risk assessments, this has come out quite strongly by supervisors of late, from what I've seen, is that they like the documents to be sort of simplified to the point to your business. What risks do your business, what are the chances of them facing it? Right. And people try and put in the consequence and impact of money laundering occurring, and then
which is actually difficult to measure.
How would you measure consequence of money laundering? The consequence of money laundering is depend on the predicate offense that generated those funds. Like say, take $10,000, right? It could be generated by a builder doing some, putting up a fence or something like that, or doing some alterations.
Yeah.
It could be generated by somebody selling drugs on the corner. It could be generated by fraud, but there's still that $10,000 that is going to be laundered. So the impact on society is going to be, dependent on the predicate offense that generated that. So how will the business understand? How can they? How will
so this simplification, and I've heard it too, that it's better to have a simplified risk assessment and compliance program so you can actually follow it.
Yeah.
The staff come businesses, and they've got to be able to manage that.
Yeah. And if you look at this whole simplification part, what does the Act say? It says you have to assess the risk of you facing money laundering. There's nothing in the Act that says you have to assess the risk of money laundering occurring successfully.
Yeah.
Through your business. So just stick to what the Act says. Just stick to what what you have to do as per the Act. It just makes it simpler for everyone.
I've got a question from the audience. Would it be good practice to do a risk assessment even if not doing any captured activities, just to prove you have considered money laundering within your practice?
Sure, absolutely.
Absolutely.
That's certainly do that. Then you can justify
because
asked by a supervisor.
Because you're a reporting entity, so not sure who this person is, but let's say you're a real estate company, you are captured as you're a reporting entity. So you have to have something in place.
Yeah, so I mean, it's again exactly what you said. So when you do your risk assessment, you look at the products and services that you offer to the public, and then in that assessment, you will see whether you're going to be offering any captured activity.
Yep.
And then you see if you don't. So then you can show that you consider it. You assessed your business with regard to those services that you offer. And then the risk would be either you have obligation or you don't have obligation, but you have shown that you've done it.
And there's a real theme here, guys, that, and I'll bring it up in a slide at the end, but I'll say it now. Really elegantly put by an auditor that I heard last year at a speech, and they said, look, if it's not written down, it didn't happen. Show me, don't tell me. And there's a really elegant way of getting you to think about your processes, your compliance program. Because if you can't demonstrate that, so to the question just before, have something in place so you can demonstrate that you understand your business and it's the same with transaction monitoring, which we'll get to. In fact, we're going to talk about that now in this question. So what are PTRs? That's part 2, just scroll back one. So PTRs, what are they, and when should you submit them to GoAML? And I'll just say, because this is a big area of our expertise, you have to register with GoAML first. Yep. That's part of the legislation. You have to. A lot of people still haven't, but a lot of people don't understand, because everybody's focused on CDD because they understand engagement with customer. But they're less maybe au fait with some of the other elements that they have to equally comply under their obligations. So PTRs, what are they and when do you need to do them?
So a PTR is any cash deposit or $10,000 and over. So you have to report it. And the other one is a wire transfer, right? International wire transfer.
So international wire transfer is confusing as well. So effectively, it's any transaction that is cross-border from outside of New Zealand into your, say, trust account, or from your trust account to another country's outside. So cross-border New Zealand, and it's $1,000 or more, then that needs to be reported. And so that's what's called a prescribed transaction report, along with cash deposits.
Large cash deposits.
Yeah, which you could probably avoid having. The way the nature of your business will change the practice of your business, if you see those at all. Okay.
Just check the question.
Another question. You can drag that onto the other screen closer to your leg.
The mouse is not picking it up.
There we go.
Okay, for PTRs, we get advice from the DIA that this does not include funds over $1,000 that are for our fees.
Correct. Yep, absolutely. So fees are not captured activity. So again, PTRs, it has to be a captured activity. So you're going to have law firms that do litigation, and if there's a fee paid into their account from an external country, then that's not captured. But you still have to demonstrate you've seen that transaction, you've monitored and you've notarized that. And that's the point. It's not whether you have PTRs or do have them, it's whether you can demonstrate that you're monitoring so you know you haven't had them.
Yeah, so that you've identified which are and which aren't.
Yep.
So, monitoring helps you sort of confirm or demonstrate that those aren't. As you said earlier, if you haven't recorded, then how can you prove that you've done it?
Yeah.
So, and then remember, it's also, you have to keep transaction records.
Correct.
So, how will you demonstrate that you have transaction record? And you should be able, the record should enable you to recreate the transactions as well.
Right.
So if it isn't written down, if those things haven't been noted, how will you be able to recreate it? It's all in somebody's,
So you raise a question, a bit like the ID, you have to keep records for 7 years. What do you do? What's the
AML Act is a bit funny on that. It says you have to keep them for 5 years after the end of the business relationship. So that could be forever.
Yeah.
So when you say the business relationship has ended, so that is it's.
So again, you need to consider that in your risk or your compliance program.
Yeah. I mean, we have seen a lot of compliance programs that say we keep our records for 7 years, but that's not what our AML Act says. I mean, that is something that justice can look at, because you're asking people basically to keep records forever. Because with an accountant, for example,
I would have said in today's world of technology and products that store information, it's not arduous to keep that information. It doesn't have to be on file in a drawer at the bottom of the desk.
Yeah. If you're keeping it electronically, then you can keep it forever. Right? It's not that difficult unless you have limitation of disk space and storage capacity. Then you might want to consider that. But it still says that 5 years after the end of the relationship, that relationship.
Okay, good. So good to know. So the training register, this is another, it's not even a myth, people just don't even focus on it, but it's the Act says you have to have one.
No, that's another myth. The Act does not say anything about that.
Right.
Okay? What the Act, there's nothing in the Act apart from the program that talks about training.
Right.
The Act section 57(1) B, it says that you have to have adequate and effective policies and procedures and controls for providing training to the AML compliance officer and the relevant people, right?
Right.
So again, it has to be adequate in the context of your business, and you have to show that you have done it as per your process. So if you don't record how you have done it, how can you show that you've done it?
Right.
So that is why.
So it's that same theme again, isn't it?
Yeah, a training register is a sort of it's an easy way of keeping a track of what you've done. It will help the compliance officer to administer that section of the program really well as well.
Right.
We strongly recommend having a training register. So if you're going to use a training provider, external training provider, there are a lot of training providers around, and just make sure that they can keep a record of all the training that has done. They might maintain the register for you, but there has to be a record. It's good. It's good procedures.
Yeah, absolutely. And so when you go and audit, or auditors audit, or the DIA come and do a spot audit, that's something they'd expect to see.
Yeah, they'd expect to see it, because that demonstrates that you have provided training as per your program. So it's again demonstrated, right?
And as an element of that, there's also making sure you do employee checks, which could be stored in that training program. In fact, as a presentation like this, could be considered a training program or training? It's awareness.
It could be exactly that. It could be because you've made people aware of the AML Act, their obligations under the Act, and this could be logged as a training session for them.
Right.
Because again, like I said, the Act does not say what training you should provide. It should be adequate in the context of your business.
Right.
So there is a lot of discretion permitted by the Act to the reporting entity, rather than
so that's good for everybody to know. The fact that you're here today and sat in on this will certainly demonstrate to your supervisor that you're actively participating in and serious about complying. Yeah.
Also, this training sessions or webinars such as these and others that are around also helps you to demonstrate that you have tried to continue to manage and mitigate your AML FT risks going forward, because we're talking about current topics and making sure your program is in place or not. So it's an ongoing process, right? So this a session like this can demonstrate that you have actively tried to effectively implement your program and continue to implement the program effectively.
Right. Okay, that's great. Actually, we're really doing well on time here. Hopefully we're not skipping. Well, I think we're going to, before we get into understanding external audit, because I think this is fascinating. I don't think people might understand that. Firstly, we see people fearful of the audit, and I say no, make it your friend, and we'll get to that. But perhaps we have try the poll. So we've got some questions and a poll, and this should pop up on everybody's screen, and we'll just let people start reading these questions and fill them out. We'll give you a bit of a break, give us a breather. You can drag that across, mate. So have you completed your risk assessment compliance program? That's good. This is really valuable information that we can share with everybody. We'll probably read through this. We'll give it another couple of minutes, well, another minute is probably enough. Oh, that's interesting. This is good, valuable information to share with everybody. This is great.
Good to see everybody's done their risk assessment so
Yeah.
far.
Yeah, and that's no surprise, probably the proactive people, logging in and being proactive about their compliance. But sadly, what I do know, talking to, in Vigilance, we see ourselves in being quite a unique position because we have a compliance platform and we work closely with auditors such as yourself to make sure it's fit for purpose. We certainly regularly meet with the DIA, and of course we work very closely with the FIU for the integration with PTRs. And so we get a lot of intelligence from all these different areas, and including, of course, reporting entities. And so we sit sort of in the middle, I guess, of what I call the AML ecosystem. And so we get a really good flavour of who's complying, who's not, where the problem areas are. And so some of these poll results are consistent with what we see and probably what you see. That's great. So we'll end the poll there. That poll we're going to share with everybody, but there's some interesting results there. Actually, we'll just share those very quickly. If Monique can manage the mouse, do you want to take over?
Disappears.
Yeah. No, it's over there. There we go. So we're just going to share this result with everybody. You should see that on your screen. I don't know if you can scroll down it yourself or not, but so good to see everybody's done their compliance program. There's a few no's there on registering. That's actually no surprise. Certainly no surprise on PEPs. That's exactly what we're seeing. So good that people are learning about that. PTRs, yep. It's either because you're unaware of it or you just don't have them, but you do need to make sure that you know that you don't have them. And training register, that's great. That's actually better than I thought. Awesome, guys. Right, so we're going to...
yeah, I want to share that screen.
Right, we'll just... can we relaunch? No, just close that. I'll stop sharing. Great. Minimize that. And then... Where's the sharesies? Is that what we want to do? Right, so... I think we're one question ahead there, Monique. Right, so probably the balance of the time is worth spending on understanding the audit process, because certainly talking with you on various occasions about the process, people have a preconceived idea. They often mix it up with the DIAs coming to do, they could do a spot audit. And of course, then you've got within the first 2 years of your compliance date, you have to do an audit anyway from an external auditor. Some businesses think that the auditor comes around as part of their other audits that happen from the associations. Not true. The external audit's quite separate. And there's some very interesting things that probably the one that I think is most important to understand that I think you should share with everybody is where you get to choose how the audit goes together. This is not the external audit. You can't do that when the DIA knock on your door and do a spot check, but certainly with your external auditor when you appoint them, You've told me that they've got the options of how much they want audited.
Yeah.
And what's the balance there?
Okay. So I held the pen for the audit guidelines for phase 1.
Right.
So I was FMA's writer for the audit guidelines. And
Right.
we did a lot of consultation with other parties, with the market on this guideline. Looked at the cost of the audit. What does the Act say? What does justice want about it? And
When you say cost, what do you mean?
Cost of doing the audit. Now,
Right.
how much would you want the reporting entity to spend
Right.
to do the audit? Because like financial audits are quite prescriptive. You have to do it according to the XRB standards.
Yeah.
So in the process of writing this particular audit guideline, we spoke to the XRB about it, and they were quite clear. They said it's not a financial audit. It doesn't have to be according to the standards of a financial audit. It is more of a, what do you say, it's an agreed upon procedures audit.
Yep.
So you have specific control objectives of your program and your risk assessment, and you're assessing your business's compliance with your specific control objectives.
Right.
That's like an internal audit.
So that's as a reporting entity, that's my control objective. So I can say,
that's your program.
Yep.
Your program.
this is my program. I think I'm strong in these areas, weak in
Right.
these. Can you check? And I get a balance, so I get a fair mix.
And the audit is really, it's an assurance process for you that you're doing what you're supposed to do.
Right.
You know, in terms of your program risk assessment, implementation of your procedures. So you might, have lots of things that you said you're going to do it in terms of your program, but you're not doing that quite well.
Right.
So this helps you get an sort of expert opinion, so to speak, from a person who knows what this is all about, knows what these documents should look like, and then see how you are implementing your obligations.
And after all, you're paying this
You're
auditor.
paying the auditor.
It's your money,
Yeah.
and you're inviting them to audit you.
They are your friend. So what we tell people is don't try to sanitize your records for your auditor, because that doesn't give you assurance that you're doing things properly, right? And make sure that the auditor knows what they're doing. And I mean, cost is a big factor. We really absolutely understand that cost is a big factor, but then, it is what are you getting? What is the output?
So if I gave an example, if I looked at it, if I was a reporting entity, which I'm not, fortunately, I certainly help them, but if I was a reporting entity, I would say, right, we have 3,000 customers. We, on average, do 1,000 transactions a month in our trust account. We probably should have already worked out what's captured and what's not. So we understand the nature and purpose of business and our customers. Given the volume of transactions and the number of customers, I want you to say 3,000 customers. I'm going to give you some sample customers, but I'm not just going to do them randomly. I'm going to say, here is some that we've done, we call simple CDD, or here's some that we don't do CDD on, and this is why, and it's here on our compliance program and risk assessment. And here's some that we actually have trouble understanding whether we are doing enough, and we want you to help us review those so we make sure we're robust in our process.
Yeah.
And similarly, we can do that for our transaction monitoring. So here's our trust account. Here's a typical month of 1,000 transactions. 20% are fees not captured. Here are the captured transactions. We understand these ones really easily, and this is how we deal with them. Correct us if we're wrong, but here's some ones we're unsure of, and I think it's really important to say, this is the areas we're not sure of, and raise those questions, because that's the opportunity during the audit to make sure that you're tickety-boo.
Like, I'd like to say the auditor is your friend, right?
Yeah.
The auditor is supposed to help you keep the regulator satisfied, happy, and make sure that your business is doing things okay without getting a knock on the door and facing enforcement action. That is your
Right.
audit, to make sure that you're doing what you're supposed to be doing. Right? It's an internal assurance process. As you know, you don't have to give your audit report to your supervisor unless they ask for it.
Yeah, that's a very important point. The report, it's your report, you've paid for it. You don't have to hand it over to the DIA. They don't store or keep them, but they can demand to see them at any time.
Right.
And we already know that the DIA have doing random audits. They did some end of 2018 on law firms. They did a bunch more post. I haven't seen the results for those. But that then gives the DIA and that sector an understanding of perhaps their compliance level.
Yeah, I mean, like with I'm just talking about phase one and experience with the FMA. So what the thing was, the supervisor, there are like hundreds, maybe thousands of reporting entities, right? So government has got a very small sort of field, sort of talent field for assessing this compliance.
Right.
So as FMA, we would at that time go to rely on the audit reports to see how the market was.
Right.
So we're going to look at the audit reports to see where people are complying, not complying, what was happening in the market. So we're hoping that the audit reports will be robust enough for us as the supervisor then to understand compliance in the market and what the reporting entities were doing. So if that audit report does not give you sort of, the supervisor a good understanding of what's happening in the business, if it's not in sufficient detail of not just what is not going well, but what is going well as well.
Right.
So as a reporting entity, you would want to know what is going well in your business and why somebody else thinks are doing things correctly.
Yeah.
Right. So, and if the supervisor gets a report that talks about good and sort of, what not so good.
It's an honest.
It'll give them.
It's not sanitized. It's more honest.
It's not sanitized. It's honest. And also, if it's just an exceptions report that I've seen where they just report on something that is not going so well. So we don't do that. We report on what's going well as well. So
So if you fail an audit, people are terrified of failing an audit, and we see people wanting to have pre-audits and get them all sorted before they get their audit. But if you view the audit as this is a process as part of you making sure you're comfortable in place and earlier rather than later, because if you fail an audit, it's more about what you need to do to rectify. And so it's better, again, to that first question, to do that perhaps earlier rather than later.
Absolutely. Better to do it earlier than later, because if there's an issue and you're starting off with the regime, and then you identify an issue where you could do better.
Yeah.
And it's better to identify it earlier rather than later, because then you might have a lot more corrective action to do if you identify it later.
And I know from a recent chat to one of the supervisors, the DIA, that rectification work has to be done. You've got to be squeaky clean. So if you're ignoring things or not doing things fit for purpose, you are going to have to go back and rectify those things, and that's a crap load of administration.
It is, and you might have software in place that you might have to sort of reconfigure. So it depends on how you put in your compliance program in place. So and
go back perhaps to customers and ask them annoying questions that you may not be dealing with.
Yeah. So sooner the better. Right. I think sooner the better, and I think it gives you assurance.
Yep.
It's an internal assurance report.
Right.
That's very important to understand. It's your report, your assurance report.
And
like when you mentioned Sam, that what type of files you should look at the customer types, right?
Right.
It's better to show the auditor all the most sort of difficult files that where you think you're not doing so. Right,
I totally agree.
Because getting a sanitized report does nothing. What does it do? Because the auditor is not taking you to court.
So again, back to an earlier point, and I think this is really important, and this is our philosophy: simplification. I've been involved in procedure and process for a long time in what we do, and you've got to have it embedded in your culture, and that means that if you're down staff members, others can pick up, or if it's the ethos of the business, the culture of the business, and it's simplified so it can become that, then it's not so difficult. And of course, if you've got a risk assessment and compliance program that's easy to follow and read for new staff, compliance staff or staff, equally so for your auditors, then you're going to be in a better place than having something convoluted, which is just cut and paste from a template.
So what you said about business continuity, right? You got new staff members. So if you have a risk assessment that clearly identifies the risks that you might face, where you could be attacked by money launderers, criminals to try and make their dirty money clean, you've identified that. Your new staff member reads that and they can easily understand where the problems might come from, right? And then they read the program. The program tells them what they have to do to prevent that from occurring successfully.
So with an audit, that's sort of what's been looked at as well by the DIA or auditors. It's talking to staff and understanding whether they understand their risk assessment.
Yeah, we do interview staff. That sometimes it's difficult with that. Again, it's the business's call, and it's again time. The time is money, and in terms of the audit. So it depends on how robust you want the audit to be. It's your call, but it doesn't serve any purpose of having a cutting costs on the audit and then
No.
having to do a lot of remediation work after that when DI come and say you're not doing things right. So yeah, a good, nice, robust audit report is really it's in your benefit.
Yeah, outstanding. Okay, so oh, did we have a look at that? Just that elegant comment that I think that's really valuable for just back one, I think. So, you know, in closing on the audit process, you know, I think this is a really good to remember. Just if it's not written down, then it didn't happen as far as an audit is concerned. So think about that and the way you go about your compliance program and executing your day-to-day obligations. And of course, you know, don't tell me, show me. So it needs to be shown in the system. So look, that concludes 45 minutes. We've actually been pretty good on time. There's been a lot of other questions come in, and we're going to share those, as I said, by midday Monday, hopefully, along with links to this webinar and those poll results. You can see those again. And there'll be a short little survey because we're hoping that we can bring back more information for you in a future webinar. And importantly, what we might focus on, because any of those questions we've covered today have layers underneath them that probably raise more questions. But hopefully we've identified some areas and made some thinking around simplification. So separate from that, if you want help or information, want to know more about services, we work closely together. We can provide anything, or certainly steer you on the direction of where you need to go. So thanks very much, everybody, for attending, and we'll follow up with an email on Monday. Enjoy the rest of Friday, and hope you have a great weekend. Thanks, guys.
Thanks.
Great.
Is that you?
And meeting, yeah.